Welcome to today's What Moved the Market show. I'm your host Prem. It's Friday, November 14th, 2025, and here is everything you need to know as the markets close for today. Indian equity markets staged a strong comeback today, ending the week on a positive note after a volatile session driven by the Bihar election results and global sentiment shifts. The Nifty 50 closed 30 points higher at 25,910, up 0.12%, while the Sensex gained 84 points, or 0.1%, to settle at 84,563. The Bank Nifty, which was the real star performer, surged 135 points, or 0.23%, to end at 58,517, hitting a fresh weekly closing high and demonstrating strong banking momentum. The rupee remained relatively stable at 88.72 against the US dollar, down marginally from 88.68 yesterday. While the rupee didn't hit a fresh high or low today, the currency has held steady amid the broader market recovery, reflecting investor confidence following the NDA's decisive victory in Bihar elections. The overall market sentiment turned distinctly positive after initial weakness, as political stability and robust Q2 earnings reassured investors despite persistent global headwinds from US Fed rate cut uncertainty. Top-performing stocks showed interesting dynamics across market caps today. Tata Motors commercial vehicles led the Nifty 50 gainers, closing 3.2% higher, followed by Eternal, which surged 2.15%. Bharat Electronics jumped 1.6% after securing additional orders worth 871 crore for fire control systems and thermal imagers. Axis Bank and Trent also posted strong gains of 1.57 and 1.52% respectively. On the flip side, Infosys faced significant selling pressure, declining 2.33% as IT sector weakness persisted. Eicher Motors fell 2.27%, while Tata Steel slipped 1.5% and HDFC Life Insurance dropped 1.27%. In the small cap segment, HBL Engineering stole the show, surging 7.79%, followed by Reach Shipbuilders, which rose 5.61%. However, Poonawalla Fincorp declined 2.28% and Brainbees Solutions fell 2.26%. The broader market narrative showed selective buying, with DII's net purchasing 3,091.87 crore, while FIIs continued their selling spree for the fourth consecutive session, offloading net 383.68 crore. Key technical levels held up well today, despite volatility. The Nifty 50 held its support zone around 25,790 levels, which coincided with the previous consolidation base, and mounted a recovery to reclaim the 25,900 zone. Immediate resistance ahead stands at 26,000 and 9,000 to 26,104 levels, where profit booking had been seen earlier in the week. Bank Nifty broke decisively through its daily resistance near 58,500, which had acted as a supply barrier, and closed near record highs. The 58,000 to 58,150 support zone held firmly, backed by strong institutional buying. Looking ahead, both indices need to sustain above these levels to pave the way for the next phase of the uptrend, with Bank Nifty potentially targeting 59,000 in the near term. Sector leadership tilted favorably toward banking, realty, and defensive plays today. The Nifty Bank Index surged to dominate performance, while PSU stocks outperformed significantly, with the Nifty PSU Bank Index climbing over 1.17% in afternoon trade. Power and telecom stocks also attracted buying interest. Conversely, the IT sector remained under pressure, with the Nifty IT index declining 0.48% as global rate cut delays spooked technology investors. Metal stocks showed mixed performance, while media and financial services struggled amid profit booking. The sectoral rotation clearly highlighted investor preference for government-backed sectors and dividend-yielding stocks over growth-oriented technology plays amid macro uncertainty. Today's market movement was significantly influenced by the Bihar Assembly election results, which confirmed the NDA's victory with a strong mandate, thereby ensuring policy continuity and reducing political uncertainty. This result acted as a powerful sentiment booster, particularly for infrastructure, banking, and PSU stocks, which are sensitive to government spending initiatives. Additionally, the bond market has been digesting expectations of a possible RBI rate cut as early as the December monetary policy meeting, following softer retail inflation data released yesterday at a record low of 0.25%. Weak US economic data and Fed chair comments suggesting a more cautious approach to rate cuts have tempered global sentiment, though this has also created a silver lining by softening expectations of aggressive US dollar strength against emerging market currencies, including the rupee. On the regulatory front, the RBI recently imposed penalties on 3 cooperative banks for compliance violations in lending to directors, KYC norms, and capital adequacy, underscoring its commitment to regulatory discipline in the cooperative banking sector. Commodity markets traded with mixed signals today. MCX gold for December delivery declined 0.37%, or 471 rupees, to settle at 1,26,280 rupees per 10 grams, as gold faced headwinds from a strengthening dollar following hawkish Fed commentary. Silver for December expiry fell 1.02%, or 1,661 rupees, to trade at 1,60,809 rupees per kilogram, mirroring weakness in the broader precious metals complex. Crude oil prices, however, showed strength, surging 1.69% to 5,329 rupees per barrel, reflecting supply concerns and geopolitical tensions. The mixed commodity action suggests investors are rotating between safe havens, like gold and energy plays, dependent on macro cues. Global markets continued their turbulent journey with geopolitical and economic data at the forefront of investor minds. US equities sold off sharply yesterday after disappointing AI earnings and renewed rate cut concerns, with the S&P 500, Nasdaq, and Dow Jones all declining between 1.6 and 2.3%. Today's session in the US remains to be seen, but expectations are for continued sensitivity to Fed rate trajectory signals. Middle East tensions and China's weakening economic data also weighed on global risk sentiment, though these headwinds proved temporary for Indian markets supported by domestic political clarity and banking momentum. For Monday's session, the Nifty 50 needs to sustain above 25,800 to maintain bullish structure and target 26,000 levels. Immediate support is placed at 25,700 to 25,650, which aligns with the 20-day moving average. Bank Nifty, trading near its all-time highs, will attempt to break above 58,500 and target 59,000 to 59,200 levels if momentum sustains. However, a breakdown below 58,000 could pull the index back toward 58,000 to 57,800. Global cues, particularly any overnight US data or central bank commentary, will set the tone for Monday's open, as markets are unlikely to trade significantly on weekend. Key catalysts for next week include any macroeconomic data releases and corporate earnings announcements, particularly from sectors like auto and metals. Here's the key takeaway for traders heading into the weekend. The Bihar election victory has shifted the narrative toward policy stability and government-backed sectors. Banking stocks have displayed impressive relative strength and have broken out to new highs, making them the sector of choice for bullish traders. Conservative investors should look for dips near 25,800 on the Nifty to build long positions for the near term, while traders should watch for any breakdown below 58,000 on Bank Nifty as a critical sell signal. We would also recommend monitoring overnight US developments, as any further hawkish Fed signals could trigger a pullback in Indian markets by next week. Thanks for tuning in to today's What Moved the Market. Send in your questions and stay tuned for tomorrow morning's wrap, and we'll catch you first thing Monday with detailed analysis of where the markets are headed. Until then, stay informed, stay invested, and we'll see you bright and early next week. Have a great weekend.